Well, it certainly does bring about some tightening in those rules, but it's also a case where China needs national champions. So it's a fine, fine line that regulators have to actually tread upon.
Yeah, I think the internet space has been relatively loosely regulated for the past a decade or so, and the regulator are level the battlefield between online and offline. But I do not believe the purpose is to handicap the larger guy from keep on innovating themselves or keep on growing their economy. Rather, it's just to create a even play field between online and offline. Some of the regulations will probably target at a specific universe. For example, antitrust is on the larger guys, but most of the other regulations, such as advertising law, such as e-commerce law, are just general and regular framework that applies to everyone in the space. I think it's less about the regulatory environment change, which is designed to create the same regulatory framework for everyone, including online and offline. And it's more about the innovation of the online guys to continue pushing the penetration from offline to online. Take community group buy as an example. This is one of the latest development in the space, driven largely by online and a target to penetrating to the offline fresh consumptions by consumer.
Alex, quickly, I mean, ultimately it also, as you say, creates a more level playing field and perhaps designed to allow some of these smaller players to become bigger without, let's say, being taken out by one of the big companies here. Is that not correct?
In the case of antitrust law, yes, this is correct, and this is actually not the first time that those are two choose one or similar market practice was raised by the regulations. Take e-commerce again as an example. These issues are also identified and specifically regulated by e-commerce law. So this is nothing new. I think by leveling the play field between online and offline, also within the online space, larger guys versus smaller guys, the second-tier players are positioned to benefit from a number of areas, such as merchant supply, product supply, etc.
Alex? Alex, so that brings me very nicely on to just asking you, which are the companies that you're looking at which benefit from this? And I think in the long term, you still have overweight ratings on the likes of Tencent, Alibaba, Meituan, and JD.com.
I think specifically in terms of the antitrust law, intuitively, the leaders in the second tier guys stand to benefit. For example, PDD and JD, they will see improvement in terms of their merchant relationship and the product supply capability.
Alex, I wanted to also, just for our Bloomberg viewers, show a chart that is showing that we've seen quite the outperformance from tech players, some of these names that you have mentioned, versus what you're seeing in the NASDAQ. Does that continue based on what you've been saying there, and I guess based on the demand for a lot of these key internet players in 2020?
Well, I think the fundamental driver for the share price performance is continued innovation in their business and expanding into new addressable market, for example, FMCG, online fresh, etc. But from another perspective, from the capital market perspective, the outperformance is largely due to a what I call liquidity-driven growth name rally. So basically, the liquidities are chasing long-term growth stories in the global equity market. In China internet space, best performers such as Meituan, PDD, Bilibili, to less degree JD, are all long-term growth stories off from low base with a potential much larger upside compared to the incumbent platform leaders. In the global place, I think this is the same case, right? A lot of the long-term growth story actually performed very well, including Tesla, etc.
How much further upside do you see from what we're calling this new retail and I guess the way that we are shopping online now as we head into the next couple of years?
At the moment, China's e-commerce penetration stands at 25%. Grocery represent a very sizable addressable market in the size of easily 3 to 5 trillion RMB. If the online innovation continues to drive consumption in these categories up online, the penetration could easily reach 30 to 40% in the next 3 years or so, which suggests continued room for these e-commerce operators to grow.
And is it based across, I guess, every sector, or are you seeing specific areas where people are choosing to shop online versus the traditional bricks and mortar?
Well, that really depends on the online penetration, and it's actually very different from one sector to another. Take advertising as an example. China's online advertising represents roughly 70% of total. So as an industry, online advertising is not very promising because the room for further penetration is limited. It's more about revenue share reshuffle based on traffic trends. Another example is e-commerce, which stands at 25% market share. So potentially there could be a lot more room for the transaction-based platforms to grow in the next few years.
And to that point, Alex, when you talk about some of the how can I say, second-tier companies, as you put it, in this industry group, which are the ones that which one do you see most promise for, and why?
I think among this group, two names are very interesting and could continue to drive upside to financials and share price on the next, let's say, on a 3 to 5 years view. One is Meituan, two is PDD. I think the common characteristic of these two companies is that one, they operate in very sizable addressable market. Two is they continue to expand their business scope and tapping into more and more consumer transaction-based use cases. Three is the core of their operation continue to perform well. So it's more about the progress of the core business, core operation versus the investment, financial impact on the investment in new territories.